How's it going, everyone? It's Sam. Today I want to go over something very different from what we normally go over. I want to talk about 3 different ways that you can gain wealth over the long term, and it's meant to be a little bit inspirational. And when I say inspirational, I'm not talking about someone getting 100x on an altcoin that they put a few $1,000s in and then retiring off of that, or just cashing out and making hundreds of thousands of dollars overnight. I'm talking about longer term things that you can do that are pretty simple. And I always liked looking at these. I always made spreadsheets about these different ways of investing and thought through what I was going to do in the future. And I think it is going to be helpful for a lot of people. And we're going to go over a crypto example, a stock example, and a real estate example. And I'm going to keep it nice and short here, just kind of giving you the broad strokes of what you could do. Now, of course, I think diversified investing is the best way to go about this. So probably a mixture of all 3, and it's going to be dependent on your own income. Some of these you won't probably be able to do if you're on a lower income. Some are going to be much easier to do with a lower income, but they're all going to be very helpful in the end, I think. Now, if you don't mind hitting the subscribe button and the like button underneath the video, that way I know to make more videos like this in the future. That's great. First of all, let's look at just a 401k employee plan. Let's say you're able to contribute about 10% of your $40,000 salary. And this is going to be like you just came out of school. Maybe you even waited a few years after school. You built up enough money to move out of the house, and then you realize you can start saving. We're going to assume that you get a 4% annual salary increase over this time period, which a lot of people might say that's kind of high. But when you consider you're starting at $40,000, that means just about less than $1 a year that you can make. And I'm assuming if you're watching this video, you're going to make a lot of money over time because you do care about your finances and care about wealth creation. So we're going to assume that you can get an annual salary increase of 4%, especially with inflation. That's not terrible. Your current age is 25 and the age of retirement is 65. So over 40 years, you're going to contribute, again, 10% a year. We're never going to increase it in this. So hopefully you can save closer to 30 or 40% by the end, maybe even more than that, but we're not going to assume that. And the annual rate of return, we're not going to even put at 10 because we want to make this kind of inflation adjusted over the long term, of course, because right now we do have higher inflation than 3%, because typically we get a 10% rate of return in the stock market. We're just going to assume you pick the S&P 500, and then usually we have about 2 to 3% inflation, so you bump this down to 7, but again, over the long term, it should be closer to 3 to 4%, hopefully. Now, we're going to assume, too, that your employer matches 100% up to 4% of your salary, so you put in $1,600, they put in $1,600 this first year. What do you think this grows to be at the end? It's pretty small at first. You know, you're looking at a couple $1,000 for the first few years, and then it grows. About 15 years in, you're at a couple $100,000. By the end of this time period, you're actually nearing $2 million, and this is, again, inflation adjusted. So $1.97 million. Of course, we could change some of this around. Let's say you started with $50,000, or you worked a little bit longer, you got a better rate of return, your employer matched a little bit more, or maybe you were just able to contribute more by the end. This would be $2.5 million. So you can make a lot of money just from investing in something like the S&P 500 over a long enough period of time. Now, there are some examples, though, that we can go through. Maybe you want a dollar cost average into Bitcoin. If you had done this every 2 weeks with just $100, so $2,600 a year for the last 6 years, you would have about $119,000. If you then took this money and you kept on buying Bitcoin, but instead of getting the rate of return that we've gotten over the last 6 years, you just got a 10% rate of return, whether it's on Bitcoin or you took it out and put it into something else, and you start with half as much, because maybe we won't get the same rate of return after just 30 years, and contributing, again, $100 every other week, never bumping this up, never putting in more than this, even with the kind of pay increases that you're probably going to get, you would still have over $1 million. You'd have about $1.42 million. And of course, we could juice this up too. We could say that you're going to put in more over time. We could say you're going to invest for longer, or you're going to get a better rate of return. Or maybe in this original example, you put in like $200, right? You could start with double as much. So you could do a lot of different things to juice this up. Now, of course, this is assuming Bitcoin's still going to do well in the future, which I assume if you're investing in Bitcoin, you think that's going to happen. But maybe you want something even more safe and tangible than the stock market, than crypto assets. You could also buy properties. And this is an example on Passive Income MD. And I've done this a lot of times, making spreadsheets of this. And this isn't even going to include all the benefits of buying a home, like some of the tax benefits, some of the appreciation, but this is just from loan paydown and from cash flow. So let's say you purchased a single family home and you do this each year. You had about $30,000, but Fannie Mae only allows you to get about 4 loans in your own name. Now you could have a significant other and then they could help and you could get 8, but we're going to assume the cash flow is $400 a month for each property with a $100,000 home purchase. Now that might be off a little bit for your area. That might be off a lot for your area. Even near me in the Midwest, I don't think we could get those types of deals on most homes. But you can find it in certain areas. It might have to be adjusted a little bit. But again, we're not taking into account appreciation either. So we're going to assume these places are basically just cash flow machines, but they don't appreciate. So we're not going to account for some of these different things. In year one, you have $30,000 invested for your first rental property. You cash flow $400 a month or $5,000 a year. At the end of year one, you reduce your home loan by about $4,800. Now, this isn't even accounting for the fact that you pay down the loans just through the mortgage as well. So again, one more thing that could be even better. And then you invest $30,000 into your second rental property. You're going to invest all of that, now $800 a month in rental income between the two houses. And you're going to pay down the first mortgage. And you're going to keep on doing this through years 3 and 4. You're getting more rental properties. But then year 5, you can't buy another house. You have 4 houses. But now your $30,000 investment goes down to pay down that first home loan. And you have some more cash flow going. Now, you can actually buy a 5th home. Cash flow is going to be $28,800 for homes 1 and 2, and then you're going to have $400 a month for 3 and 5. So you're just going to keep on doing this, paying off the previous home when you get up to a max of 4 houses with loans, and then you're going to buy a next rental property. So at the end of the 10 years, you're going to have 8 rental properties at that point. 4 homes are completely paid off, paying $800 a month, and then you're going to have cash flow of about $57,600. Now, for a lot of people, that would be enough to retire on, or at least one person could retire in your family, and then the other person could keep working, or you could just kind of focus on this and maybe making some more rental income. If you actually accounted for appreciation with just 3.4% yields, your total equity in the homes would be about $750,000. Your total investment has been $300,000. So basically tripling up in 3 years. Now, you're going to have a snowball effect. You can see the cash flow per year going up exponentially at 15 and 20. Of course, we're skipping some years here, so it looks even more exponential. But after year 15, you're going to own 12 homes, which you're going to have over $100,000 in cash flow. And then year 20, you're going to own 19 homes, and the cash flow is $173,000. So you can grow wealth exponentially. Now, this is a little bit different because you are assuming that you can invest more money. If we put that kind of money into, let's say, Bitcoin, right? $2,000 every month, that'd be $24,000 through the year. Over the last 6 years, you would have over $1 million. But again, that is a little bit riskier, less cash flow as well, while these grow in appreciation and they have cash flow. So there are a lot of different ways that you can make money in today's day and age. Of course, a lot of homes don't look this attractive, so you do have to do a lot of work on the buying side. And definitely the stock market and the crypto market can be very back and forth. But if you just dollar cost average over long term, you can make a lot of money, and you should make a lot of money if you look over a long enough period of time. Now, let me know which of these seems most attractive to you. Which one would you rather have? I know I invest a lot into crypto, but honestly, I would really like some cash flowing rental properties. And I put a little bit of time and effort into finding them, and around my area, it's pretty hard to find. We have had a lot of appreciation. A lot of people are willing to pay a lot for homes right now. We haven't had quite that cliff that a lot of people think we're going to have because the interest rate hikes. So it will be interesting to see. Maybe a lot of us will come back in a year or two and say, hey, we were able to get some great deals in rental real estate. Or maybe you just don't want to do the work of deciding which properties, and you don't want the risk of Bitcoin. Maybe you just want to go with stocks and you just want to buy the S&P 500. It's easy. It pays dividends. You don't have to think about it. Your employer matches as well. There are a lot of good ways of going about this, but I think as long as you stick to some path and you make sure that you diversify risk, you don't want to go all in with your entire life savings into some growth company. You should be good over the long term. Let me know your thoughts. Thank you so much. I appreciate it. Let me know if you want more of these, and I'll see you in the next one. Bye.